Hey everyone, in this video I'm going to do another installment of my Q&A with Wall Street series, this time addressing Rivian stock. So let's get into this Q&A session and learn a little bit more about Rivian stock. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. Alright, so the first question is coming from Bank of America Securities from John Murphy asking, is it maybe better to focus on pulling forward the launch of the R2 and committing capital, both human and dollars, to pulling that forward and getting that high volume program up and running as opposed to tinkering with the line on the R1? Alright, so for those of you that are not aware, Rivian is planning to shut down its manufacturing facilities during the second quarter so that it can upgrade the R1 platform. The R2 platform, which Mr. Murphy is addressing, is Rivian's next generation platform, which is planning to start around 2026, late 2026. That platform is for a lower cost SUV, lower cost R2 models. So what the Bank of America analyst is asking is, why are you trying to improve this R1 and spending money shutting down the facilities in the second quarter trying to improve R1? Shouldn't it be better, or wouldn't it be better if you use that money and energy and resource to try and make the R2 even sooner, right? Instead of trying to improve the R1, because eventually you're going to get to the R2. That's the platform you want to get to. That's the platform that has the potential to actually make your company profitable, versus the R1, which is not profitable. It's not going to be profitable. So what gives here? And so what the management comes on to answer is, so we're certainly working very hard to make sure that we deliver the R2 on time. But we just have to recognize how much of the content that's going into the shutdown in the second quarter translates to the R2. So what the management is saying is, most of the improvement, or some of the improvement that we're implementing here for the R1, it's going to benefit the R2 as well. It's going to benefit the R2 as well. There's a massive consolidation of our ECUs in the vehicle. So that's all the computers in the vehicle which we design and engineer in-house. We've consolidated them. We've reduced the number of computers by about 65%, and that network architecture is associated ECU topology is very closely related to what's in the R2. So they're already incorporating some of what's going to be in the R2 into this upgrade for the R1. And management is saying that that's going to go into that one as well. So that's helping them already bring forward the R2. And the volume that R2 brings allows us to be more aggressive in pricing with a number of those suppliers that are on the R1 program. So the two are very much interlinked. Interesting. So it seems like management is bringing in some of the prospects or some of the features of the R2 into this R1 upgrade, because they can do it at a lower cost, and it'll help with the R1. It'll help lower the losses on the bottom line between now and when they get the R2 up and running, because right now they're losing a lot of money. Earlier in the conference call, management noted that their gross profit, they're losing $43,000 per car that they sell. $43,000 per car that they sell. So what they're trying to do here is reduce those losses. And so they're pulling forward some of the aspects of the R2, bringing it into the R1, it seems like, so that they can reduce the losses here earlier and test it out maybe also. See what's working, see what needs to be improved for when they implement the R2. That's what management is saying. This isn't separate. It's not completely separate. So we are, in a sense, working on the R2 while we're upgrading the R1 program. The Bank of America analyst asks a follow-up question asking about the product life cycle. How long are these cars going to last? Are consumers going to upgrade every 4 to 5 years, or are they going to keep these for roughly 5 to 10 years? So again, the CEO jumps in and says, from a customer point of view, one of the things we see is most valued is making sure that the platform, the vehicle platform and architecture allows for a continuous stream of updates. And the likelihood of repurchase is the highest for our brand, he's saying. And a lot of that is born out of the continued updates we're making through over the year of software improvements. And so we think that's a really dramatic shift in just how we think about products and sort of overall vehicle life cycle. So what I'm taking this to mean is that these vehicles are going to be longer lasting than legacy vehicles, because Rivian's going to be able to extend their use through software updates. And that's going to make consumers really like the value proposition. And whenever it does come time to upgrade to their next vehicle, they're going to want to continue with Rivian. They're going to be brand loyal because they're going to be so happy with the updates and upgrades that we've given them through these software updates. Now, I wouldn't be surprised if Rivian starts to try and upsell existing customers with these new software updates, telling customers, look, we have this new update available. You can buy it for $795 or $1,300 or whatever it might be. Those would be really profitable incremental revenue sources for Rivian. Remains to be seen how they approach that, but it seems like what the CEO is saying is that these vehicles are going to be longer lasting than the traditional legacy vehicles. So that's interesting. That's something, of course, it's too early to tell with Rivian because they're just, a few years old, right? They only just started delivering vehicles for a couple of years now. And so it's too early to tell, but it's interesting to consider this and think about this for the long term. All right. The next question is coming from Adam Jonas from Morgan Stanley, asking how much of the volume that you forecast for this year is pre-orders versus what you expect to be sold out of inventory. So the CEO again jumps in to say that a lot of the customers that are in our backlog have been there for a number of years. It's not as if the moment someone gets to the front of the line and we're ready to make the delivery to them, that they can take delivery at that moment. So the way to think about our backlog is to recognize that this will continue to exist through the remainder of this year. So in parallel to delivering vehicles from our backlog, we'll also be delivering vehicles from newer orders that are happening over the course of this year. And if you've been following Rivian like I have for several years, you'll have noticed that they've been talking about a lot of cancellations of those pre-orders. When it's coming time for the customer to take delivery, they're canceling a lot of the times. Instead of taking and making that order, they're saying, you know what, we don't want it. Let's try and get our deposit back. If we can't get our deposit back, then whatever, we'd rather lose that deposit than make the purchase, because these vehicles now, compared to when we made the pre-order, they're a lot less, I don't want to say interesting or desired. I just want to say that we're in a different position now as a customer than when we were when we made that pre-order, right? You think about during the pandemic and just coming out of the pandemic, consumers were more flush with cash following several rounds of government stimulus, and they were working from home. Their expenses were a lot lower. They had a lot more money. Interest rates were a lot lower. Fast forward today, a lot of that stimulus money has been spent. Interest rates are much higher. Job prospects are not as strong as they were 2 years ago. So consumers are in a different position. So when it comes time to finally get that order that they've been waiting for, turns out they say, you know what, no thank you, we don't want it anymore. So what Rivian's doing is they've created something they call the R1 shop, which allows some of the more common build combinations to be put in there to allow customers to get access to those vehicles more quickly. That balance, so they're going to try and balance some of selling new cars and some of delivering some of those pre-orders. And that balance has been something they're learning to navigate, and we do expect to continue to have to manage that balance over the course of the year. Interesting, right? So I learned a lot from this Q&A session with Rivian. It's interesting to go through these and see what Wall Street analysts want to know from management and what management says to these questions. So it's really interesting for me. I hope you found it interesting as well. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.